Hi there. We're rounding up yet another week, and you know what that means. It's time for you to join me, Surabhi Upadhyay, at the CNBC TV 18 Market Cafe. Now, I was thinking, this last one-year rally in the stock market, it's been a very interesting one because it has not been led by usual stocks, usual sectors, IT, banks. No, it's been none of that. The sector that's really stolen the limelight, stolen the thunder, is one that's been considered a dog for the longest time. I'm talking about PSU stocks. Nobody ever wanted to buy PSU stocks. They were just seen as great plays if you want to get some dividend in your portfolio. But something changed in the last 12 months. You know what? Some numbers. The BSE CPSE index, which is the Central Public Sector Enterprises, that index has rallied over 40% in the last 1 year, 42 to 43% in the last 1 year. Contrast that with the Nifty, which is up just about 10% in the last 12 months, or even the mid-cap index, which is up 25%. PSU stocks have just burst through the charts. The question is this for real? Is this a flash in the pan? Is it some freak coincidence? Or can you keep making money with these stocks? Well, I thought of calling someone who saw the PSU trend early, in fact, several years ahead of the curve. And I'm sure he's a pretty happy man because he's done that. A lot of people have discovered this only in the last few months, but he's been there, done that. So let me introduce my guest on the show today, Sridhar Sivaram, the investment director at ENAM. Sridhar, thank you so much for coming in.
Thanks for inviting me, Surabhi.
And welcome to the CNBC TV 18 Market Cafe.
Thank you for calling.
As I was thinking about it, you saw the whole PSU trend start, what, 2 years? One
Yeah,
and a half
almost
years?
3 years now, because November of 2020 is when we first discovered, and from there we built a portfolio.
November 2020, that's
almost
just
3
after
years.
COVID.
Yeah, just after COVID.
And we are speaking in October now, 3 years ahead of
Almost
the
3
curve.
years.
I'm thinking instead of calling you here, I should have made you buy this coffee at like a really fancy coffee shop.
Sure, why not?
But we have really good coffee here, tea, coffee, green tea, whatever you like. So shall we
Of
kickstart
course,
this?
let's do that.
Let's get to the cafe then, come on. Please, have a seat.
Thanks a lot.
Okay, and I think our coffee should be arriving shortly.
Sure,
I think I'll go for the same coffee. It is for me today. Before we get started, I know that you are a wildlife enthusiast.
Yes.
And by the way, he's also a great photographer. I mean, some of those shots are fantastic. And you were recently in the jungles again, weren't you?
Yes, I was in Tadoba recently. The jungles open on 1st October, so I always try to be in the jungle the day it opens after the
the
monsoon.
monsoons.
Exactly. But I'm also into, as I've been doing this for almost 8-10 years now, I realize that you also have to give back. So I've gone into this whole wildlife conservation and protecting the environment.
Oh.
So I work with a lot of NGOs, trying to, raise funds for them. There's a lot of man-animal conflict. Plastics have reached everywhere. If you want some photographs, I can
Oh, yes, absolutely.
Here you go.
These are phenomenal. Oh, my God, these are phenomenal shots. This is beautiful stuff. Oh, they're looking magnificent, these cats.
Unless we work on the conservation,
Yeah.
the next generation may not be able to see them the
Absolutely.
way we are seeing. So, which is why I've got into the whole conservation part of it. And currently, I'm working on a project in Arunachal, in a jungle called, which is very pristine. And a lot of, not too many people are focused on Northeast. I happen to go there, and looks very interesting place, but needs a lot of conservation effort to keep it as beautiful as it is.
This is really inspiring because we live in a jungle called Mumbai. We work in a jungle called the stock markets, but I think the one that you visited is the most beautiful of the lot.
I know, and I hope it stays like that. So whatever little I can do, and I'm sure a lot of others also do, to keep the place.
How do you balance? I mean, there's this high-paced world of money and finance and stocks, and then you manage to sort of go out and follow some of these other passions. What's the connect?
Yeah, so actually, ours is a high-stress job, and you need to have some way to de-stress. As they say that if you carry your portfolio home, then you're never at peace. So there is
Forever thinking about the missed
Yeah,
opportunity, or maybe
exactly.
that was the one mistake that you made.
So I've learned over a period that FOMO doesn't help, and you need some other ways of de-stressing or just cutting off from the noise that we get. And I find a lot of peace in with nature. So I go on a trek, or I just go in the wild, and you just feel completely cut off from the markets for a few days, maybe
Yeah.
3-4 days. It just rejuvenates you. Your clarity of thinking improves,
Yeah.
and you have time to reflect on what you're doing.
And was it in one of these jungles where you got the idea about PSU stocks and then, okay, this is where the next round of money making will happen?
Well, the PSU stocks actually was quite an accident. I always say that we as investors have biases in our investing. And I learned very early in my investing career that you may have your bias, but when you go into a meeting, keep your biases outside the room,
Yeah.
and go as a neutral view, and then see how the meeting progresses. So it happened sometime in November of 2020 that we were offered a meeting with a PSU bank. And honestly, I didn't think it was an investable idea at that time. And it's just that we were just getting out of the first lockdown, the COVID was still there, and the government had launched a few programs, especially the credit guarantee program, and we wanted to know how that was progressing. So we, took the meeting. It was a Zoom meeting, and as the meeting progressed, we realized to our own shock that their 2 quarters of results were already out, and their pre-provision profit was higher than the market cap at that time. It was quite absurd.
Pre-provisioning profit of this particular PSU bank
Yes.
that you met, that was higher than the market cap.
Yes, was higher than the market cap. And typically for a private sector bank, you would say it will be a pre-provision profit to market cap is around 10 times or 5 times for a not well-run bank. This was under the pre-provision profit. I mean, it was quite absurd. And we knew that something was seriously wrong. And the other thing is, I mean, then as we, dwell deeper into it, because it was quite a shocker, then we realized that, these are deep value. It was trading at 0.2 or 0.3 book. We just realized that.
But maybe, allow me to come in over here, maybe for good measure, because I guess there was a lot of fear at that point. I remember, just after COVID, the lockdowns, and then the government started coming in with some stimulus measures and some of these
That's right.
subsidy and credit guarantee schemes. And one was worried whether PSU banks will be left holding the can yet again because of a crisis that was unfolding.
Of course.
But you weren't worried about that.
So actually, it's the price at which you enter, right? At 0.2, as they say, kitna hi jayega? How much can you lose from here?
Yeah,
I mean,
yeah.
the price was so attractive that your dividend yield was almost 8-9%. It looked very difficult that you would lose money. We didn't expect that we'll make so much money out of it. And also in the previous few years, a lot of the banking NPAs were cleaned up pre-COVID. I mean, the COVID part we didn't know.
Yeah.
But pre-COVID, we knew that a lot of the NPAs were
That
cleaned
whole
up.
AQR cycle, yeah.
The banks
Yeah,
had
yeah.
provided. So we had some visibility on what the actual problem was, because the NPAs were broadly known. So they had a high gross NPA, and the provisioning we knew was not adequate, but we knew what the problem was. It was easier. It was a known devil, apart from the COVID part. But the price was so attractive, Surabhi, that you just felt you just can't lose money out of this. Whether we'll make so much money was surely not known, but it's just attractive at the entry point. And then we analyzed a lot of other PSU banks at that point of time because this looked so attractive. And then we said, why not other PSUs? And then that's how this whole journey started.
So you bought some PSUs as well, beyond the banks?
Yes, exactly.
Other public sector companies
Yes,
as well?
Yes. So we ended up buying a few banks and then some of the other PSUs because all of them were very deep value.
I'm sure your peers really envy you in the market, right? No, absolutely. You know what? I want to give you a flavor of the kind of questions that we've been getting. I just
Sure.
asked on social media that, okay, we're having a chat on PSU
Sure.
stocks. So does anybody have any questions? Our timelines and feeds were flooded, as you would imagine. So just to give you a flavor of what people want to know. And it's cutting across different lines. Someone's asking about Canara Bank, that, what should I be doing now? There is someone saying that is Coal India still attractive or has it run up too much? Someone's asking about PFC and REC. Someone is saying that, should I stick with IRCTC or not? You know, it's telling you, right, that this is a rally that's not just about banks run by the government. It's railways, it's defense, it's, you know, a stock like Coal India, which no one cared about.
Yeah, yeah.
It's NTPC, it's across the board.
So I'll
what's
give you,
happened?
so I'll give you a context of this. So when we did this analysis in, say, 3 years back, the entire PSU basket market cap, excluding the banks, was about 9 lakh crores, roughly. Just Reliance had more market cap than all the PSUs put together. This included the NTPC, Coal India, and the works. LIC was not yet listed, so I'm keeping that away. Currently, that number is around 25 lakh crores. So it's gone 2.5x in the last 3 years, which is a fairly significant jump for the entire PSU basket. So I would say that a lot has happened from where we started to where we are now. Is it a basket case now? I would say no, because
Basket case.
yeah, because it was. I mean, you just buy a PSU at that point of time.
Yeah.
And did we know we'll make so much money? No. But it looked as if you'll make money. Now, if I look at, say, we were bullish on the defense stocks, they've rallied a lot. Am I as bullish as I was, say, 2 years back? No, the answer is no.
What did you see 2 years ago in defense? Banks, like you explained, you met a PSU
So
bank,
I
you
think
figured
the
there's value.
defense was more that the government was keen on pushing some of the orders to domestic entities. So it was not just on the public sector, it was also on the private sector. It was a combined research that came up with the thought process that defense as a sector will do well. So both public and private have done well.
sector companies.
Have done well. So it looked like the government was focused on, giving orders to Indian companies, and some of the, defense companies have done well. They've got large order books now, but unfortunately, as the order books have started to go up, their market caps have gone up disproportionately. So the risk reward may not be as favorable as it is today, as it was, say, a year back or year and a half back. So I think it has to be very stock specific now. One has to really analyze in each sector. There is opportunity, but it has to be, like you mentioned about some banks. Some of the banks still look very, very attractive. They may have 4-5% dividend yields, but some of them are trading at, say, 3.5-4 times, price to book for a PSU bank, and in those cases, the free float are just 3-4%. So, is it justified? I don't think so. But within the entire PSU bank basket, we have banks which have ROAs close to 1.7 to 1.8 times ROA.
PSU
and
banks.
PSU banks.
Which is almost coming close to private sector banks.
Exactly.
Yeah.
And banks which have, say, 0.6 ROA. Now, can I value all of them in the same multiple?
Yeah.
Obviously not. So if a bank is very efficient, then I will have to give a slightly higher multiple because they are as efficient as a private sector bank. So that's why I said that it is becoming very stock specific, and we now look at this basket more stock specific than entire
Than just
sector.
a broad, which is why
Exactly.
this is the harder part.
Yes.
I
Sure,
must allow
thanks.
you to
Yeah.
have some
Yeah.
of your coffee. I think Deepak's question really sums that up, and he's one of our viewers. He's asking, should we look to buy defense and railway stocks like Cochin Shipyard or Titagarh Wagons at high valuations? And I think this is the crux of the problem that everyone's grappling with, right? So let's go sector by sector, because
Sure.
I don't think there's an answer which kind of cuts across every single PSU out there. Let's look at an area like defense, you mentioned. Now here, stocks like a Mazagon, Dockyard, or even some of the private sector names, Garden Reach Shipbuilders, the rally is huge.
Yes.
Stocks have gone up 100, 200, in some cases 300% in just 1 year. So is this a case where you need to sort of hold back and start booking profits, or is this a multi-year structural story in the making where you've got to learn to live with high valuations?
Yeah, so Surabhi, some of the names you mentioned, were trading at 3 and 4 Ps. If you got your estimates right for 1 year forward. And those are really absurd, valuations by any metrics. The question was, will the E come?
Yeah.
So that was the big question mark. And based on our analysis, we thought there was a very high probability that E will come, maybe with, the earnings will come, maybe with possibly a 6 to 8 months delay, but the order books were so strong that there was a good visibility on the earnings. Having said that, now after having rallied say 300, 400%, the risk reward is no longer as favorable. But do they still have value? There is. I mean,
They still have value, you
yeah,
feel,
they still
after
have
this
value.
huge
exactly.
run-up. Okay.
So, has the large part of re-rating already happened? Answer is yes. Can they give you earnings-based returns? I think that's something which
We need
people
to
have
see.
Yeah, that can happen. Which is if the companies now post say 20% earnings growth over the next 2-3 years, then they could give you that 15 to 20% return.
So is that what you would advise investors to do? Look at the next, I mean, we'll be in the quarterly season soon. Look at the next 1-2 quarters, see where there are profits and sustained earnings, and stick with those stocks?
So I think there is a little bit of skill involved where you have to analyze the balance sheet, analyze the order book, see what they say in their conference calls, and then make an informed judgment whether the earnings are lumpy.
Okay, so don't just kind of, jump in with the tide. You can't just swim with the tide and expect to get rich.
Is the risk reward looking as favorable as it was, say, 2.5 years back? Maybe no, but it will still give you returns.
Got it. So we've spoken about defense briefly. Railways. I mean, my God, whether it is IRFC, whether it is, IRCTC, whether it is RVNL, every single stock that has the word Indian Railways in it has just gone through the roof.
So, Surabhi, actually...
Is it justified, you think?
To some extent, yes, because you have to look at the budget numbers to analyze what is happening. So, out of the 10 lakh crores of, capital expenditure that the government has earmarked for the current year, almost 2.5-3 lakhs is for railways.
Yeah.
And that's a fairly significant number because it has jumped almost 3 times over the last 3-4 years. So, the government has been putting a lot of emphasis on infrastructure and particularly in railways.
Sure.
What we're also seeing is the focus on indigenization, which is to manufacture as much as possible in India, which is why a lot of these companies are getting orders. Earlier, a lot of the orders used to go to MNCs. Now we are seeing a lot of the orders come to domestic Indian companies. The other thing that has happened is a lot of the states are also spending money on railways, specifically on metros.
Right.
So
right, yeah.
that comes part of the
and
railway
companies like BEML, for instance,
Yes.
they are doing a lot of these metro orders
Correct.
as
So
well.
that also comes into some of these orders. So the opportunity set is huge, and some of the, I would say, the rally that has happened is surely justified, and maybe from here on also they will do well. But this is becoming a very stock specific now because the rally has been so sharp that one has to be very careful. But the opportunity is surely there.
What else? There's power. And power, okay, I guess you'd agree with me that there was a fundamental reason as well. Suddenly we realized that we have this shortage happening. We don't have enough green power. Maybe we need to invest more in thermal power. What have you made of everything that's been happening there? Look at NTPC, look at Power Grid. Who ever thought NTPC will make fresh lifetime highs? But it happened just last month.
Yeah, so again, in all these cases also, the starting point was very important because, they were such deep value. And as you realize that they can generate, say, 17-18% earnings return and ROEs of 17-18% because they do have return on equity guaranteed for them because of the contracts that they have. These looked quite attractive. Initially, they were dividend yield stocks, but then as people realized that there is a certainty of earnings in some of these, and as the investable opportunity outside these started to shrink, because many of the other growth stocks were trading at such high valuations, and you were not sure of how the market's going to play out, given how interest rates are positioned. And typically, higher interest rates leads to value stock doing better than growth. I mean, I'm just saying this is as a broad, 250 degrees from top, if you're taking a top-down view. That's a broad view. When interest rates are going up, value stocks tend to do well. I think maybe that's also playing out here, somewhere we know that interest rates are higher for longer.
And that's another narrative. That's a conversation for another day. I'll sit you down on that one as well. Absolutely. High interest rates are a huge talking point. Today, if you were to put fresh money to work in PSU stocks, A, whether would you do that at all? And B, if you would, which PSU pockets still look good to you?
So some of the banks still look very good.
Okay.
In the banks, the credit cycle has been the best that we've seen for many years, across maybe many cycles. In fact, Mr. Kotak went on to say that this is the Cinderella moment for the Indian banking sector. The question is when is going to be 12 o'clock? But we think that the party is not ended.
Okay.
So if the credit cycle is good, PSU banks generally tend to benefit because they're not the best in assessing credit. But if the entire environment is very good, then that environment is helping them to, ride the wave, and the NPAs are very low.
Is that why PSU banks have anyway rallied far more than private sector banks in the last few months?
So the other reason is that their credit cost at the starting of the cycle was very high. Say some of these banks had credit cost of say 2.5% of their loans. SBI now is 50 basis points. And their guidance is 50 basis points for the year. First quarter was 35 basis points. Okay, so even though they're guiding 50, they're not even getting 50 credit costs, which is they're not getting that much of NPAs, so they're not even providing what they have guided for. And credit cost has a direct impact, which is basically the provisioning line.
Yeah, wow.
Provisioning
Providing
line
for bad loans, yeah.
The provisioning line has a direct impact on your PBT and PAT.
Sure.
So if your provisioning is lower,
Yeah.
then
Profits are higher.
Profits are higher.
Yeah.
In some of the PSU banks, the credit cost is still falling, which is there at 1.5%, and they're expected to go to say 70, 80 basis points over the next 2 years. So they will still see disproportionate profit growth. Maybe the operating profit may still grow in the mid-teens, but the profit growth still could be 40, 50% growth because the provisioning line is coming down. So that's where the skill comes in. So you have to look at companies where the credit cost is high and how is it trending. And if I'm getting 40% growth in a bank, it's no longer a value stock. It's actually...
It's a growth stock then.
It's a growth stock.
A PSU bank growth stock, my God, in the same sentence saying that.
So that's the point I'm making, that you do have pockets in the banks where you could get 40, 50% earnings growth even from here for the next 2 years.
Oh, okay.
So which is why we think that that's a pocket, worth...
still looking at, yeah.
Yeah.
And what else? What other PSU pockets?
I would say power sector, but that's a more defensive play right now because you're not sure of how the markets play out.
Yeah.
We have an election coming up.
Elections. Speaking of that, I was thinking of risks. PSUs at the end of the day are governed by government policy. Is that a risk at all? If there is a change for whatever reasons, could that kind of twist the story?
So to start with, I don't think PSUs are structural stories. So one has to be very careful when you're investing in them. If I buy a private sector bank, I may be holding them for maybe 10 years, 15 years. Is it the same case with PSUs? The answer is no. When we invested 3 years back, our view was that we will reassess in a year's time. And things only improved from there. The macro environment improved from there for the economy as a whole and for them. And some of them we are still holding. So because as I mentioned, if it's still giving me 30, 40% earnings growth, there's no reason for me to move out. There's still about 4, 5% dividend yield. So we are still holding. But we are constantly reassessing because as I mentioned, especially for the banks, if this is a Cinderella moment, at some point it'll be 12 o'clock and time to exit.
Yeah.
So we need to keep a close watch.
Keep an eye on the clock as well.
Exactly. So, and that clock basically is what is happening to the credit cycle.
Sure.
So if we are in the best of credit cycle today, it's going to turn at some point of time. This is too good to be true. You speak to any banker, he'll tell you this is too good to be true. We can't have credit cycles where you're not getting any NPAs at all. Literally no NPAs. So we're keeping a close eye on that. Irrespective of what happens to the election, I think the bigger risk is some of these macro related stuff, especially credit costs for banks, and for policies. For other sectors, it is more policies, like say defense or a power sector's policies. I don't think a change in a government will make such a difference because some of these policies are well entrenched now. But still, it's something where one has to be very careful about and watchful.
Superb, Sridhar. Great conversation. Thank you so much for joining us today. And hope to have you back on the cafe more often.
Thank you very much.
Thank you so much.